Hi, I'm Myron Genick from LongPoint ETFs, and I'm back with our fifth and definitely final video from our contango trilogy. I won't recap the first four videos of this series. I encourage you to watch them if you haven't already, as I really want to get to today's content. Last time, I promised that I would quantify the impact of backwardation with real-world data. So this time, we'll be looking at the period from December 3rd, 2024 to January 31st, 2025. Over this period, front-month nat gas was largely unchanged. That's important because we want to remove the effect of changes in nat gas itself. Second, I wanted to look at a time horizon that consisted mostly of backwardation. Over this period, contango averaged nearly 40 cents, or about 10% a month. Zooming out, you can see that there's some seasonality to contango, with backwardation occurring to some extent every winter starting around 2018, shortly after the US began exporting LNG. As discussed last week, there are other factors that can cause price changes in levered ETFs, including fees and expenses, as well as leverage decay, also known as beta slippage. Basically, the choppier an underlying asset trades from day to day, the greater the decline in the value of a levered ETF on that underlying asset, regardless of whether it's a bull or a bear ETF. This impact is especially true over longer time horizons. In this case, we're looking at a very choppy period with nat gas fluctuating between $3 and $4.40. So the beta slippage will be significant. But you'll see that backwardation played a huge role in the moves of NGUP and NGDN. Let's look at the data. During our time horizon, front month natural gas was basically flat, increasing by just 0.1%. Now let's look at NGDN, which provides negative 2 times the daily return. One might think that NGDN would be down 0.2% or negative 2 times 0.1%, but that would ignore the beta slippage from daily rebalancing as well as fees and expenses. And it would also ignore the backwardation, which is lethal to bearish ETFs. What we see is that NGDN was actually down nearly 50% over this period. This move was largely driven by backwardation. How do we know this? Well, remember that beta slippage and fees and expenses impact bullish and bearish ETFs somewhat similarly, but not exactly. That's a deeper level of math that we'll set aside for now. If nat gas futures were unchanged, then most of the difference in returns between the bull and the bear ETF would be largely explained by backwardation. So let's look at NGUP. Over that same period, it was up over 40%. This is an incredible result. Backwardation was incredibly beneficial for the bull ETF and lethal for the bear ETF. Last week, we showed how contango, the opposite of backwardation, had the opposite effect. So when you're trading nat gas ETFs or ETFs based on any futures, remember that contango and backwardation can have a massive impact on the ETF returns, sometimes even dwarfing the impact of the futures price itself. This concludes our 5-part trilogy on contango. You can trade NGUP and NGDN to take short-term high-conviction positions on the price and on the curve of natural gas futures contracts. Please like and subscribe and visit longpointetfs.com for more information and to register for updates.